Good morning, everyone. You are highly welcome to our page this morning, where we are stylishly waiting for others to join us. I think it's better for us to just start on why we are on. I believe others will coast in. Once again, you are welcome to our page. Today, we have in mind to take it through the commodity markets. And really, when mentioning commodity, what comes to mind quickly most times are agricultural products like yams, rice, paddy rice, soya beans, sorghum, maize, and all like that. But there are others products like gold and other metals that are in these commodity exchange. But today we are focusing more on the agricultural products. So, and we are doing this in conjunction with the FX exchange, and we have two senior officers from the exchange to take us through. They will be focusing more on the agricultural product, as I earlier mentioned, and they will take us through how their platform, the exchange platform, has helped all the players across the agricultural value chains, all the players that have been starting from the farmer, the warehouse owners, the logistic people, finally to the processor, really, how it has helped all of us. And equally, you and I that are ordinary investors in the market, how their platform has been of great help to all of us. And you'll be able to see how ordinary investors like us can participate and make money and be able to smile to your bank at the end of the day. And these are major areas they are looking at today. So they will take us through their systems and be able to show us how the process and the way you can come in, buy, sell, and all like that. Again, it's important to say this, that one of the major reasons why we consider this webinar important is that we felt strongly that there's a need for the investment managers to deeply look into this area. The diversification, as we know it, when you have a portfolio, when you mention portfolio, what comes to mind most times what comes to mind is most times are equities and maybe more equity and property development. That's quickly a property investment that comes to mind quickly. But when a portfolio become more impressive and robust when you have a basket of all these together, and you can imagine how beautiful it looks by the time you have some commodities in your portfolio, and it's how you'll be able to make more money from this angle too, aside looking at the conventional, the equity market and the properties as might be. This is one of the major reasons why we look at it and saying, okay, this is another angle why we can be a very great benefit to our clients and our associates. And that's why I feel strongly that we should do this in conjunction with the exchange, which is the FX exchange. So gentlemen and ladies, you are highly welcome to this page. And I won't take so much of your time because already we are losing time already. So let me allow all of you, or before then, let me introduce the facilitator to you, the senior officers from the FX Exchange. I have with me Mr. Michael Martins. Mr. Michael Martins is the portfolio manager with the exchange. And equally, I have also Ms. Zara Dogo, who happens to be the investment manager also. She and our colleagues will take us through this program. So you're highly welcome once again. I believe we should get our pen and paper ready for them. So let me call in Mr. Michael Martins first to start with. Thank you. Michael.
All right, thanks a lot, Mr. Habib. And good morning, everyone. We do appreciate you joining this webinar, and our sincerest hope that you would learn, or we can communicate as much as is possible, the investment opportunities that are sort of available within the commodities market. Just a brief moment, I think I would allow my colleague Zara to share a screen, and then we can sort of continue from there on in.
Good morning, everyone. Thank you again for joining this webinar today to discuss the commodities markets, the commodities exchange, and the benefits of playing within a commodities exchange. So let me just share my screen, and then we can dive right into it. Okay, can someone please confirm that they can see my screen?
Yes, we can.
So in talking about the commodities markets, the first thing we need to understand is what are commodities. Essentially, these are goods of quality and value that can be delivered to a market by multiple suppliers. And we have four major categories of commodities, which are metal, agriculture, energy, and livestock. For agriculture, we can have commodities such as maize, soybeans, paddy rice, sugarcane, and the likes. For metal, things like platinum, gold, silver, and the likes of those. For energy, we have commodities such as crude oil, natural gases, and for livestock, we could have dairy, we could have cow, and the likes of those. Also, for commodities, looking at commodities, let's delve into commodity markets. So a commodity market is simply a market where buying and selling of commodities takes place. And we have two types of commodity markets, which are formal and informal markets. Under informal markets, these are physical markets where physical buying and selling of these commodities take place. For the formal, this would be a standardized and central place where this buying and selling takes place. More often than not, formal will be taking place within an exchange. So just as we spoke about the types of commodity markets, we will just look at that in depth. So we have two types of commodity markets. The exchange traded, which involves the financial contracts between two parties. Under this, ideally, you would see contracts such as futures, swaps, options, and forwards. And for the OTC and cash markets, this would be physical deliverability of the commodities. So looking at the commodities markets landscape, there is a whole ecosystem which includes the primary producers, the marketers, and the off-takers. Under primary producers, we would have input providers that provide inputs such as fertilizers, seedlings, and pesticides to the farmers. For marketers, we would have the village aggregators and traders who get these commodities off of the farmers and provide it to the off-takers who are processors and turn this into finished goods. So some fundamentals that drive commodity prices within this space would be demand and supply. So let's see, we have two seasons we have two periods within a season in the commodity space, which is the harvest season and the planting season and the harvest season. For the planting season, usually there would be, because there is very little supply, there will be a lot of demand, and usually prices tend to go up during the season. And during the harvesting time, there is a lot of supply in the market. So the price of commodities ideally would go down. So there's an inverse relationship between demand and supply within the commodities space. So let's look into commodities exchanges. So previously I said that we have two types of commodity markets, the formal and the informal, and we just had a look at the informal market. So now we'll be going into formal commodity space, which is the commodities exchange. So basically an exchange is just a marketplace that is transparent and competitive. The commodities within this space are usually standardized, and there are rules and regulations that guide trading on commodities exchange. So looking at the landscape for commodities exchange, from beginning to end, from the beginning of the transaction up to the end, we have pre-trade, which includes the goods being taken to the warehouse. There is grading to make sure that the quality meets up to the standard of the exchange. Here, quality assurance takes place. More often than not, within the space of, within the pre-trade space, we would have the producers, the traders, the intermediary to these transactions would be the agri service providers. Then we have the primary markets where these goods are sold. More often than not, we have the OTC, and this involves the buying and selling of these commodities, of physical commodities. Here, price discovery happens, and processors are usually the off-takers in the primary market. In the secondary market, we have financial contracts for these commodities, such as spots, futures. Usually, liquidity affects transactions within this space. We have speculators, we have the hedgers, and we have investors. And post-trade, this deals with storage, securitization of physical commodities. We have issuers, and then where the transaction takes place, which is within the exchange. So some commodity exchanges that we have around the world, as you can see from my screen, we have, looking at East Africa, we have the East African Exchange in Rwanda. We have the Nairobi Coffee Exchange in Kenya. In America, we have the US Futures Exchange. There's also the Chicago Mercantile Exchange. In West Africa, we have the #1 private commodities exchange within the country, which is FX Commodities. We have Ghana Commodities Exchange. So we can see that there are different commodities exchanges scattered in North Africa, South Africa, Europe, and other continents. So I will allow my colleague delve into FX's role within the commodity space globally and within the country. Thank you very much.
All right, thanks a lot, Zara. Truly appreciate that. All right, fantastic. So like Zara mentioned, I will be talking about FX's role. FX's role in the commodities market, particularly within Nigeria. So first off, we have commodities trading. So a large part of what happens on the exchange is commodities trading. If you think about what the primary role or primary function of an exchange is, it's essentially to act as an intermediary between people who want to buy commodities and people who also want to sell commodities, right? So on the sell side part of the conversation is where you have farmers, traders, and other, big merchants in the commodities market, right? And on the buy side of that market is where you have big processor, and then you have also other different types of investors that are partaking in the market at any, at every other point in time. So that's a primary function, right, of what we do, or that's a primary function of what an exchange does. And that's one of the fundamental things that we do here at FX Commodities Exchange. Secondly is also the provision of quality inputs, right? So in an attempt to build up the sell side part of the market, right? Because part of the fundamental issues that we have in today's commodities market or the agricultural ecosystem is the fact that there isn't necessarily the availability of quality inputs for smallholder farmers to cultivate. Right. So one of the things we do as an exchange is the provision of quality inputs to smallholder farmers, such that they can then increase their productivity and then increase their production subsequently. Right. Thirdly, here is market access, right? So it says here that we provide access to a ready and fair market while aggregating large volume of commodities, right? And this market, you have to understand fundamentally that this market access is both for physical product and also for financial product, right? So on the physical product side was what I explained earlier, where you have farmers, traders, right, bring their commodities to the exchange to sell through, any of AFEX's accredited warehouses, right? And on the other side of that is usually processors who want to buy this commodity so that they can use it in their production process, right? Secondly, with regards to market access, is also what we we call financial products, right? So on one side, you have people, let's say, for example, the same smallholder farmer who is trying to edge his position in the market or who is trying to sell off his volume. They can't do that by leveraging on financial market, the financial market products that are available on the exchange. And buyers, processors, and or maybe in this case, more importantly, investors can also then partake in the commodities market, as I'm sure you would be interested in, can also partake in the commodities market by buying and selling financial products, either by spot contracts or exchange traded contracts. Another service that we also offer, and I'll just run through the rest because they're a bit more auxiliary services. So we have storage and aggregation, which I've already mentioned on. We also have extension services, which is essentially us supporting the smallholder farmers by, essentially educating them on the best way to cultivate and to also aggregate subsequently. Financial inclusion is also a big part of what we are doing on the exchange. And this webinar is essentially one of that. This webinar is essentially one of that too. And this essentially involves the verification of the farmer profiles and also credit source, right? So this is an attempt by the exchange to include a lot of smallholder farmers that we have on our network, to include them in the financial economy. So moving on from that, in terms of our operation, we've traded approximately 35 billion, traded over 500,000 metric tons. As of today, we cover commodity value chains of maize, soybean, paddy rice, sorghum, ginger, cocoa, sesame, and cashew, with over 103 warehouses crossing more than 24 different states. So in terms of our platform, as I've explained earlier, we have approximately 103 warehouses crossing 24 different states. 4 out of 5 commodity market participants as of today anyways, right? 4 out of 5 commodity market participants have limited access to buyers, right? Which is part of that original market access work that we do, on the exchange, right? So it's important for anybody who is coming to the exchange, who is coming to sell their commodities, of capital, right? Capital equals agency, and we believe that the commodities market can be leveraged innovatively to drive investments, right, in the agricultural sector, right? So as Mr. Abib had mentioned at the beginning of this conversation, saying that, when you think about your portfolio and how you allocate your capital, the commodities market does also provide that alternative between, in addition to your equities, your fixed income, and let's even say your alternative portfolio that would include real estate. In addition to that, you also can have the commodities market, which allows you to allocate your capital to that market and then gain some sort of significant price appreciation on your capital. When you think about that currently exists today on AFEX's exchange, like I mentioned before, we currently play in the physical market across this commodity value chain: maize, soybean, paddy rice, grains, oilseeds, and also exports. In terms of markets that we would also be working on before the end of this year, we also have some markets in gold, power, and energy. At least I can say categorically that we would have a gold derivative contract before the end of this year. What some of the other contracts that are also traded on the exchange is also options, futures, and forwards. In terms of structured products, and this is more on the financing side of the conversation, we have repo agreements. We also have ETCs, which I would, so we also have ETCs, and ETCs are essentially designed like an index, right? So as opposed to just buying one commodity, right? And just to give a vivid example of that, if you were to go to the exchange today, you have the ability to either buy one singular maize contract, one singular soybean contract, or one singular paddy rice contract, correct? In addition to that, we also have indexes that sort of aggregates different currencies and then puts them in a basket such that that basket is then tradable, right? So as opposed to you just being able to buy one commodity per time, you can then also buy a basket that contains three different commodities, right? So for example, the first ETC that was designed at the exchange was designed containing maize, soybean, and also sorghum. And maize, soybean, and sorghum, and that exchange traded contract did approximately 68% over a 270-day period, right? So that's an example of an exchange traded contract. It's essentially, we also have, in addition to that, I think I'm hearing some feedback from somebody's background, so please, if you can help with that. In terms of structured product, we also have the trade finance notes, which is a notes that we designed for export commodities in particular. We also trade, in addition to structured products and also derivatives, there are also fixed income products available on the exchange for trading, even though this would more actually apply to people that have a significant amount of capital at their disposal, and it cuts across commercial papers, bonds, and then also impute notes. So like I mentioned earlier, we have different types of products on the exchange. This just gives an overview of what the profile of those different products are. So for example, you have spot contracts that are very often traded over a 270-day period. We also have asset-backed commercial paper, which is essentially like a fixed income product, much in the same way you buy a treasury bill. You can also buy an asset-backed commercial paper program. Its tenure is fixed and you get your return after 270 days. The same also goes for the ETC, which I explained earlier, that is essentially a basket of commodities. And that ETC essentially just tries the price of the underlying asset itself. Trade finance note, I've mentioned that the impute finance note is a fixed income product too that is raised in order to provide those quality imputes to smallholder farmers. And like I mentioned, we will also be having derivatives being traded on the exchange before the end of the year. In terms of market performance for some of the indexes that we've had over time, I think it's important to mention here, right? So if you look at the commodity price trend between 2017 and the year 2020, we've had a significant increase when you just going by this data of more than 400% across, maize, soybean, paddy rice from the year 2017, from the year 2017 to the year 2020, as this data shows, right? And you can also see that similar trend. Sorry, there's a feedback from somebody's background. I don't know who that is. So please mute if that is coming from your end. Thank you. All right. So like I mentioned, there is that tendency for commodity prices to rise significantly over an extended period of time. In addition to that, if you look at the 4-year average return, for maize, it's about 32%, for soybean, it's about 33%, and for rice, it's about 18%. And this is particularly important. So let me just, okay, so I mean, and if you have any questions too, while I'm going through this presentation, you can either just write them in the, you can either write them in the chat box, or you can just wait until you finish the conversation and you can just ask it directly. So if, like I said, this is the return profile for maize, soybean, and rice. And if you look below too, that's also for cocoa and also for ginger. That's the 2-year average return. The reason why this is particularly important is this. When you're considering any sort of investment at any point in time, your major consideration is, of course, fundamentally the return on investment that particular investment can give to you at any point in time. Another consideration after that is the inflation rate, right? Which is the rate at which your money, the currency that you're trading in, is losing value every single year. Now, if you look at the inflation rate for Nigeria, it has been significantly high over the past 2 years, right? I think today that number currently ranges between 16 and 17%. Now, this is what that means. At every single point in time where you want to invest, you have to make sure, right, that investment can give you a return that is at the very least, higher than what that inflation rate is. If it is not, you would essentially be losing money on that particular investment. So let me give an example. So let's say, for example, the inflation rate as it currently is about 17%. And you make an investment over a 360-day period that gives you only 5%. or that gives you only 10%. What that means is that the real rate of return on that investment is 17%, is 10% minus the 17%, which is the inflation rate. And that's a negative 7%, meaning that you've significantly lost money on just that investment. Even though you've made money on that investment, you've lost money overall when you compare what your return on that investment is in comparison to the inflation rate. That is where we always make that argument that investing in the commodities market is an edge against inflation. And what that means is that at every other point in time, a return on an invested commodity within the commodities market will give you a return that is higher than what you currently have on the inflation rate. Moving on from that, this just shows what the aggregated volume traded on the exchange is quarter on quarter from the year 2020 to 2021, and I'm referring to the top left here. And then this just shows the growth in transaction volume over time. Right, like I mentioned earlier, if you look at the ACI, which is the AFEX Commodities Index that comprises of maize, soybean, sorghum, and I think also paddy rice, there is a tendency for commodity prices to move up over time, right? So take, for example, with issues that have been happening globally with the coronavirus in 2020, the Omicron variation in 2021, and then also the Russia-Ukraine crisis. There's been significant movement in the international commodities market, and a lot of that also transfers to the local commodities market. But in any given scenario, even absent of those absent of those macroeconomic factors, commodity prices tend to go up over a 270-day period. And I think Zara explained that brilliantly. When you cultivate commodities, right, so usually cultivation in Nigeria happens around the month of May and June, and harvest will happen around the month of November, December, sometimes even as early as October. What you will tend to see as the price dynamic within the commodities market is because there's oversupply in the month of November and in the month of October through to December, commodity prices will tend to fall within that particular time period, right? But as you move forward over a 9-month period through the entire commodity trading cycle, the demand very often overshadows supply, right? You usually have a whole lot more demand than there are commodities available to address that demand. So just to give you a sense of that, the commodity production demand for maize in Nigeria is about, or commodity production rather, is about 12 to 13 million metric tons in Nigeria. The demand is somewhere within the range of 15 to 16, meaning that there's about a 2 to 3 million metric ton gap every other year that needs to be filled, right? So that tells you that in the commodities market at every other, and it's the same across board for most of the commodities that are cultivated. Another thing that is also important here, considering that if the exchange rate in the country is also something that we pay attention to, that the exchange rate in the country is something that we pay attention to, especially when making investments, is also that. So take, for example, there is this conversation with regards to the fact that Nigeria is a monoproduct economy. We are largely dependent on oil. That is in some sense true, right? And that's largely because when the foreign reserve falls, then that reduces our ability to purchase goods from abroad, right? And goods from abroad essentially just become more expensive, and those prices tend to also transfer to every other thing, right? So meaning that when you see a change in the exchange rate, that very often transfers into the price of every other thing that you're buying on a day-to-day basis. And that very often also includes commodity prices, right? What you see here as the simple analysis here shows is that there is about a 63% correlation between the AFEX Commodities Index and the exchange rate, right? What that means is that when you see a positive change in the exchange rate from, let's say, so take, for example, the dollar has been devalued significantly over this year from about 500 to somewhere around 585 right now. That change in the exchange rate, you will very often also see about a 63% correlated change in the broad commodities market, right? In terms of portfolio diversification too, this is particularly important, especially if you want a portfolio where your risk is essentially diversified and there isn't any sort of extraneous over dependency on just one asset class. So this measures what the changes are on the Nigerian Stock Exchange. That's the ASI, the All Share Index. And it also measures the changes in the AFEX Commodities Index, which is the proxy or the proxy index for the commodities market. And this shows that there's about a 28% or a 0.28% correlation between both markets, meaning that there is very little correlation between both, which is essentially good, right? When you're designing your portfolio, right? What that means is that if there's a high correlation between both asset classes, then if one is going up, the other is also going up, correct? And if one is going down, the other is also going down. What this shows is that at every other point in time, a movement in one doesn't correlates very little to a movement in the other, right? They're separate, they're independent markets, and they move very differently. And this is what this data here shows. And as we always mention, if you want to know more, about trading commodities itself, you can always sign up for, you can always sign up and download the app COMEX by AFEX, which is available on iOS and also on Android. I think Zara would want to show a demo from this standpoint. Zara, can you confirm?
Yes, Michael, I would like to do that.
Okay. That's the end of my presentation. I'll just hand over to Zara to take it from here.
Okay, so let me share my screen. Okay. Please confirm that you can see my screen.
Yes, we can.
Okay, so this is what the website looks like for COMEX. And the next thing we'll do will be to sign in once you have signed up. So this is what the dashboard would look like. It shows you how to fund your wallet, securities value, how much cash you have available in your wallet, what securities you have purchased, your loan balance. Here, ideally, once you sign up, it shows you the demo. So on the demo, you're able to use fake money to buy and sell. Here, you're just able to play around with COMEX and understand the fundamentals of buying and selling on the exchange. So once you have been able to get a good grasp of what the exchange is all about, how you can fund, buy and sell, you switch to live, where you have to actually fund your wallet. So let's switch to live and let's see how you're able to do that. So to fund your wallet, you have two options. This can either be through bank transfer or through card payment. Through card payments, this would be through Paystack. So once you have funded your wallet, it reflects, once you make your transfer, it reflects in your wallet on COMEX. So the same way you're able to deposit funds, you're also able to withdraw. Here it shows you exactly how much you have left in your wallet, a breakdown of what it is that you have. You put in the amounts that you wish to withdraw, select the bank. If you don't want to send the money to the account through which the money was gotten to fund your wallet, you can select another bank, input your details. You will have to put in your login password just to verify your identity, and that money is being sent to your bank account. So let's look at the market and the products that we have available on the exchange. So here, the product view gives you a breakdown of all of the commodities that are listed on the exchange, all of the fixed income products that we have available. So here you're able to buy and you are able to sell. Sorry, let me just fund my wallet so we can do a transaction together on here. So say I was to fund my wallet with, let's say 500,000. So it gives you a breakdown of the transaction details and the fee that you will pay to Paystack and how much is actually moved into your wallet. So because this is a demo, it already has some bank details that I just put in there for an example. And we have my wallet funded. So I'm going to refresh my screen. so that we can see the money available. I think it will reflect anytime. It should reflect anytime. So just whilst we're waiting for that to reflect, let's see how we can buy and sell on the exchange. Okay, so as I said earlier on, the product view gives you a breakdown of all of the commodities and all of the fixed income products that we have listed on the exchange. So say we wanted to buy, let's say for example, spot cashew. I click on buy, a buy order comes out for me to create one. This shows you how much you have available in your wallet to use. It shows you the community. I will be coming to the community soon to show you how you can trade under Woodland Capital's community. So ideally, being a member of registering under Woodland Capital, the community comes here as Woodland Capital. So let's say we're using Zara Investments. That will come here as Zara Investments. And it shows you how many units of cashew you already have. You have made a purchase before. You put in your order quantity for how many units you wish to buy. Let's say we want to buy 5. This shows you the current price of cashew as at today on the exchange. You put in the amount you wish to buy cashew at. So your order is technically, it is valid for 7 days. So if it's not matched within 7 days, it automatically cancels on the exchange. And also within 7 days, if your order is not yet matched, you're able to automatically cancel that trade. So here it shows you a total breakdown of your order. So that shows you the order amount, which is 480 naira per unit, and we're buying 5. So that comes down to 2,400 naira. Brokerage fee is 0.75. We have a SEC fee of 0.3%, an exchange fee of 0.5, and VAT, which is 7.5 of the total fees. So this brings your amount payable to 2,430 naira. So from 2,400, you will have the different fees included, which comes to about 39 naira, and you're able to place your order. So this has not been placed yet because the money has not yet reflected in my account, but ideally this should be successful. So once that happens, you're able to come to your open orders, and here you have a breakdown of all of the commodities or the fixed income products that you have purchased on the exchange. So if that spot transaction on May does not close within 7 days, it becomes a cancelled order. And once it has gone through, it's a closed order. So once your trade has been closed, you get an automatic contract note sent to you via mail and by text message. So here you're also able to look at the price history of the commodities that we have on the exchange. So if we're looking to do an in-depth research into all of the commodities that we have on the exchange and the price list, you come onto price history and click on the dates, and you're able to see a chart, and I believe also download the price list off of price history. So this isn't showing here because this is a demo page, but once you're able to sign up and sign in under Woodland Capital, this will be accessible to you. So as I said, we have open orders, we have closed orders, and your canceled orders. So now let's go to community to see how you can sign up under Woodland Capital. So once you click on community, you see you would have different options of the different communities that we have on the exchange. But as Woodland Capital, they would share with you their referral code, which can be sent through WhatsApp, Facebook, LinkedIn, or Twitter. So once you use that referral code, it automatically brings you to Woodland Capital's community. So this is just a breakdown of this is just an example of what the community would look like. So there'll be details about Woodland Capital, which entails when it was created, the members that are under this community, and the name of the owner and the community type, which ideally should be broker-dealer. There is a form through which you can communicate with the admin for Woodland Capital. For Woodland Capital, this shows them a breakdown of all of the transactions that their clients would have made and the commissions that they get. And also you're able to chat with other members of Woodland Capital. So here we could have a conversation about the commodities market, different policies that could affect the commodities market. We could talk about the different commodities that are on the exchange, the price. Basically, it's open to any conversation that you wish to have. So you're able to click on portfolio. This shows you all of the securities that you have under your portfolio, both cash settled, which will be your spot securities, your fixed income, and your deliverable spot securities. So you can click on reports to see your statement of accounts, to see how much you funded your wallet with, when the money came in, and also get your contract notes on here. So also, something I have not yet mentioned is that at the bottom of your screen, you have the price list for all of the commodities that are available on the exchange, both spot and both for the physical commodities. So this is always available to you if you're looking to buy or sell on the exchange. We also have the latest news pertaining to the commodities industry, to the agricultural industry, to the investment industry as well. So as you can see, something about Elon Musk buying Twitter for 44 billion. So you can get up-to-date news from the latest news segment of COMEX. We also have another option to learn how to trade. So here we have different videos showing you how to trade different commodities and the different products that we have on the exchange. We are looking to understand the ecosystem within the commodity space here at Apex. You can read up on warehouse receipts, how to hedge your position, spot contracts. There are so many videos here that you can watch to just have a better understanding of the market. And here we have market reports that we give out weekly to the investors on the exchange. So once you have signed up under Woodland Community, you can easily access these reports. So I think I have given us a basic breakdown of how to navigate COMEX. And at this point, Michael and I will take questions. Thank you very much.
Oh, thank you, Sarah.
I think there are questions, one or two questions in the question box that you might want to address.
Okay, I can see a question here. How can commodity growers have access to the exchange without going through traditional local buyers? So all you have to do is sign up on the exchange. I will share a link on here through which you can access COMEX. So it's ask you a few details, your email address, your phone number, and from there you can you're able to access the commodities market in Nigeria. So we have a physical part of the exchange where we do physical buying and selling. So we have been able to, we have about 103 warehouses across the country where you can go and either deposit your commodities or purchase your commodities. So that way we have been able to reduce, make it more accessible. Yeah. I don't know if Michael has anything to add to that.
Not as of this moment, no. No, I think that covers it.
Please, if you have more questions, feel free to type them in the question box.
Thank you very much, Zara. I'll also say that we'll have our phone numbers and an email as well, where people can still send questions to after the webinar itself. So the conversation can continue even after this. I'll have that posted now.
Sure, that's not a problem. So yes, we will share the presentation with Woodland Capital. I'm sure they can share it with their clients.
Well, if there are no more questions, I think Habib can round off for us.
Hi, Habib. We can't hear you. I think you're muted, but we can't hear anything.
I think think he just said he's having some problems with his speaker. While we're waiting for him, I could help there. What we want to do is just to thank everyone. He has emphasized from the beginning that the whole idea is to help people diversify their portfolio and be able to, get another asset class into their portfolio, as it were. This conversation is just an initiation for you to have a fair idea of what the commodities exchange looks like. I know there are deeper questions to be asked. Perhaps we're going to have another webinar where we'll talk more about the products. Is a big bag?
Yeah, I'm back. Please continue.
Okay.
Let me get where.
All right. So let me just say that we will probably have another webinar where we'll talk specifically about the products so people can get even more aware. It bears noting that the rates, I can share an experience. For example, I think the fair exchange traded commodities that was done in February, which is the second one, I was just checking our portfolio now, and I've seen a year-to-date gain of almost 22%. If you annualize that, that's you can imagine we're talking just 2 months. And I mean, the reason for that is quite obvious. The way commodities have played out in the last few months with the war in Ukraine and a few other things that's happening in the macro environment. So this is a good asset class that people should include in their portfolio. I will let Abib just say a bit about WCM Capital, and then we'll thank everyone again for attending.
Sorry,
and I'm sure
I think
we posted the numbers. So if you want to ask more questions as to how to start the process, you can call us or send us mails on those numbers and the email. Thank you. Habib, over to you.
Sorry, just before,
Sarah, you want to say something?
Just before Habib goes on, I think we can speak to the products just so your clients are able to have a better understanding of some of the products that we have on the exchange, if that's okay.
Okay, please go ahead. We still have little time, so can do it.
Okay.
We have like 10 minutes. We'll do that quickly.
Okay, so I'll just quickly run us through the products that we have. Okay, so some of the products we have, our products are split into two: variable income instruments and fixed income instruments. Under the variables, we have spot contracts. So these are just a securitized version of the physical market. So instead of people having to go to the farms or go to the markets to buy the physical commodities, take maize, for example, we've already done all of that. So you're able to just come on the exchange and trade the securitized version of these commodities that we have. So instead of buying, let's say like a bag of maize in the market, you can come and buy 1 kg or 100 kg of maize on the exchange. So you're able to buy and sell on the exchange. So another variable income that we have is the exchange traded commodities. So this is similar to your exchange traded funds. It's basically a pool or a basket of different commodities that track the performance of the underlying asset. So for the last FETC that we had, the one we had last year, that gave a return of 68%. We had an FETC that came out in January that was oversubscribed by over 25%. So we had another one again in February. So if you're looking to do either sports or FETC, you can do that on the exchange. We also have fixed income instruments such as asset-backed commercial paper, trade finance notes, and input finance notes. So we try here at FX, we try to meet the need of all of the participants within the exchange. So we have ABCP, which meets the needs of our processors. This is basically to fund the working capital of the processors that buy most of our commodities on the exchange. So usually the tenor is for 270 days. The risk profile is very low. So more often than not, this would be for pre-qualified processors that have done a couple of transactions on the exchange. More often than not, they are unable to get loans from banks and microfinance banks. So we come in to fill that need, and then we've been able to create the asset-backed commercial paper for them. For our farmers that usually have issues accessing fertilizer or seedlings or pesticides, we've created the input finance notes. So we have, as of today, over 350,000 farmers on the exchange. So we've been able to come up with this product that supplies them the input notes at a fee. The risk profile for this is a bit high because it's easy for a farmer to default on his loan. But then most of our warehouses are scattered across states where we have the farmers that provide us with the commodities. So we're able to track most of the farmers, and we also have all of them on our database. Then we have trade finance notes that works to service the working operations of the traders on the exchange. So this could be for our export transactions or transactions that take place within the country. It's ideally for a period of 270 days to 365 days. And the risk profile for this is moderate to low. So as I said, we'll be sharing this presentation so that you can take your time and go through everything that we have discussed today. Thank you very much.
Okay, thank you, Zara. Let me just quickly talk about us too. At least it's important to let you know this particular company doing this, really. Our company, WCM Capital Limited, we are formerly known as Woodland Capital Market PLC, was founded in 2004, but we started the brokerage business in 2010. We are members of Nigerian Stock Exchange, and we registered also with the Security and Exchange Commission. We are presently, we have the trading license. We are trading license holder of the NGX, and that's after the demonetizations of the Nigerian Stock Exchange. Well, the current owner of the companies actually acquired this particular company in 2013, and we have successfully run it for over 9 years. And even presently, we are representing brokers on the National Council of Nigerian Stock Exchange. We offer quite a number of services, the brokerage services across asset classes, from stocks, bonds, equally ETF, Naira denominations, dollar and Naira denominations bonds, as you wanted, and equally the ETF, Naira and dollars denominations. The commodity market, as we have equally plugged to you. Again, let me mention that this quarter, we'll be launching our asset management franchise, and where we will be able to help to manage wealth in both for both the rich and the aspiring ones among us here. At least just to mention a few about us, really, and that's about us, really. Sarah, before we go, there's a particular questions on the screen, which if you still have 1 or 2 minutes to answer it, we'd like either you or Mike to quickly look at it to answer it. Look at the chat room, please. Hello, Zara, are you there?
Hi, yes, I'm here.
Good. So have you seen the question?
Yes. So what are the factors to consider before you term a product high risk? So spot contracts will be termed at high risk. And as you know, with equities as well, this is daily buying and selling. So if you do not have good understanding of the markets that you're in, it's very easy for you to lose money. So you'd have to do a lot of research to know when to enter the market, when to exit the market as well. So also, for example, with the input notes that I put as high risk, as much as it is a high risk, we have put mitigation in place to hedge against this risk, such that we have these farmers on our databases. We are people that we interact with on a day-to-day basis. So there's little to no default on that. Also, the farmers give 15% equity when it comes to the input finance transaction, and there is a 75% guarantee on it. So for our fixed income, there's mitigation already in place for whatever risk there is. But for a spot transaction where it's buying and selling on a daily, you just have to really have a good grasp of the market. And in such an instance, we provide weekly, monthly, and quarterly research reports. Also, for that, the transactions on the exchange mirror, the prices of the commodities on the exchange mirror, the physical prices of these commodities. So just having a good understanding of what is happening outside of the exchange, what's going on in the market, how much these commodities are going for, will give you a good understanding of how much these commodities are going for on the exchange.
Okay.
I hope I've been able to answer that question.
Well, it's okay, Sarah. Thank you very much. Let me say this again. Okay, we actually intend to share this, the presentation and the lectures to all the participants in this on the forum here. Again, let me thank all of you for having time to join us this morning. We no doubt highly appreciate this from everyone for having time to join us on this webinar. We intend to do this more often to bring to your doorsteps on how you can diversify your portfolio in a more beautiful way. And we encourage you also to check on our website, see how you can connect with us. We equally intend all the people that have joined us, we queue or be in our community under this particular exchange, FX exchange, so that you can go through us and get it. We equally assured you that once we have your details, emails, addresses, we intend to send to you up to date of prices or from the market, from the FX market, so that you'll be having and be able to study how the market goes. Again, Sarah has mentioned in the last questions that it's important to research into it, getting to know when to join boats and get out, of the boat equally goes a long way on how to make a spread for your client or for the portfolio you manage. It is important to know that commodity market is more of the seasonal. So, and these, he has equally said it, when she was presenting the products, you can see at the tail of it, you can see 270 days to all those indicating, the time lag for those of us that are investors here. Those are things we need to study. Michael equally mentioned it too in his presentation, letting us know that the period of harvest and the when they are planting, telling us that this equally between the March and March and June, and by October the thing is on. So there's a need for someone to study the seasons on each of the products. I've always, at least I can tell you without to let you know that, take for example, maize. I've joined the boat. I've joined the exchange on the purchase of maize October, and by March I was already around. By the time the first rate comes, I'm already out of the trade, and quite enough spread was made. That I can tell you. There's a need for somebody to research and go into it and know how to make money on it. This is a beautiful market. We encourage you to look at it. For those of you that are investors, that are investment managers on the screen, we hope that you take your time to look at it and join us in this. Again, we thank every one of you for finding time to join us this morning. It's been a wonderful one, and we still have the mind to repeat this as time goes on. Once again, thank you very much. We hereby close this for our webinar. Thank you very much, ladies and gentlemen.
Thank you. Enjoy the rest of your day.